We are live. Live from.
We're
Well,
live.
we're still on the ground. In what city are you right now?
No, I'm actually 30,000 feet up in the air.
But I thought they said you're not allowed to make video calls using the airplane Wi-Fi. Or are you flying private?
No,
You're flying private?
You're gonna get kicked off.
It's kind of crazy it's kind of crazy that it works, I will say.
No, look, it's innovation. I remember being on one of the first aircrafts that had Wi-Fi back in like 2011, 2010. And it was amazing. It completely changes innovation, right? And your ability to be productive. And then, it makes me think of autonomous, like driving vehicles, where you can totally just maximize all the dead time in a vehicle to be productive.
This is giving me anxiety for everyone around Rick on this plane.
What's that?
I think
I would be so mad if I was on this plane, if someone was doing a podcast next to me.
Speaking of business development for Delta, though, you could actually start to carve out business class tickets where calls are acceptable. You just jack up the Wi-Fi, charge it to the company, and you can have meetings on the plane. You just have to identify it as a meeting type flight so that people around don't have an expectation, and then boom, you got a whole new ticket class you can charge for.
Yeah.
No,
I like it.
It'll be co-working in the sky. We fly. We fly will be the new thing.
It's good. Instead of we work fly. We fly work.
Let's buy an airline. Just do we fly. Is there anybody out there with a couple $1 billion to spend?
Exactly.
All right.
We'll have to figure out. Well, we'll have to figure out if we do Saturday morning too. But I'm good with this. I mean, the guy to my left and my right both have earbuds in, and the guy to my right, I'm sure, has noise cancellations. What's that?
Is it okay if we do our show now, Rick, or do we have to talk about your nonsense?
No, but I think this is kind of relevant in the sense that, look, check that.
Oh yeah, here we go.
I'm removing him. I can't live like this.
That's fine. Do it.
I did. Hey Potter, happy Real Fridays. That is funny though. I will admit that is funny.
We've got 2 minutes to prove it that it happened, that it worked. So what's going on? What's going on in your world this week?
All kinds of stuff. Did a 24-hour trip out to Charlotte. Actually less. Did like a 16-hour trip out to Charlotte to 8 hours in an office, 4 hours at a Topgolf stall, and 4 hours at the in and out of the airport, I guess. So efficient midweek travel, but otherwise being at the home office, just working. We're working on launching a few lenders. I mean, we're coming into home buying season, so the existing lenders we have, we're working on some new campaigns. A lot of them are stepping up lead flow, hiring. Not to say that it's like all sunshine and rainbows just yet, but positive signals, I think, or at least, or people trying to make the most of the home buying season, whatever that may be, So people are the partners I talk to are being pretty aggressive. I mean, it's getting a little harder to hire loan officers. It seems like at least in direct consumer type roles, national online lender type roles. So yeah, been on the road a good bit, but same old. What's new in your world?
One of the things I was thinking about this week related to home buying season, quote unquote, is that there was some conversation at that recent economic summit about sort of gridlock in the housing market. And what I mean by that is everybody who wants to buy a house doesn't own a house today. And as a result, they are not vacating a unit that goes on the market. So the traditional kind of chain of transactions in home buying season was when you have somebody move, they unlock a house that somebody else moves into, who unlocks a house that somebody else moves into. And there's always first-time home buyers. But in this market, everyone's talking about rates going down to, let's say, the 6s or the high 5s or the mid 5s. And all of a sudden, that's going to make affordability look really good on a loan estimate. for a first-time home buyer. But it isn't going to much matter if that first-time home buyer can't find a house to put a contract on. So what would you think about if you were a mortgage lender going, hey, I could probably do 400,000 more pre-approvals in March and April than I've done in January and February. How many of those are going to turn into a signed contract? And how do I think about that? I don't know that I've heard a lot of people talking specifically about that problem. It always comes back to supply, and everybody's always like, we need more supply. Sure. But if you're a mortgage company, you can't affect supply. Like I was posting about Rocket Mortgage today because I was just thinking about this is like, you can promote the American dream as much as you want, but if there aren't ways that you get your mortgages accepted, what's the point? And I don't know how to explain to a mortgage CEO what I would do about that. I think about it a lot because I want to be someone who's helping mortgage CEOs understand that and address it and work on it. Obviously, you are too, and so is NewZip. So let's not talk about the NewZip like ability to nurture, because we know if you're looking 6 to 12 months out, that's what NewZip does all day, every day, easily. We help you maintain that lead, curate that lead for 6 to 12 months. But if you're looking at the next 3 months, who's going to buy a house? Who are these people that you can get pre-approved who will actually find a house, even if rates drop? Am I crazy?
Who are these people? You know, like what specifically are you thinking? What specifically are you asking?
Is there enough business out there? Is there enough business out there to justify a push into?
Okay, I got you. Yeah. You can. So you're saying we can all pre-approve a lot more people because there's people that want to buy. Duh. But are there people that are gonna buy? That's the question.
Able to.
Yeah.
Like,
Rich, I think the number saying investors, but
Rick's comment on LinkedIn is a good one, which is we know there are qualified first-time home buyers more so than ever before. Okay, then what? Now they have their pre-approval, and their pre-approval, let's even say it's the highest, best pre-approval you can get. It's fully underwritten with AUS. It's a real credit limit that the conventional market will honor, and you've given them their LE. Maybe you've even locked them in for extended rate lock to get them shopping. Like maybe all those things are true.
Yeah.
Can you bank on them finding a house sufficient to justify the spend in the next?
Very market by market, obviously, but but that's kind of a cop-out answer. Like, I mean, the median person that can qualify to buy a home that doesn't have one today can't afford the median home. Definitely not. You know, affordability is among the lowest it's been, you know, in 30 plus years, if not ever, depending on how you measure it. So. Yeah. But yeah, it raises a few interesting questions. I was on, I talking all day, every day to loan officers and like sales managers on the purchase side. I hear a lot of like, does NewZip even want, cause they're talking to us. They're like, does NewZip even want this lead? Like, we used the work number or whatever, and like, they're not ready, for any of the homes in their market. We looked at their income, we looked at their this and that. And, historically, and even still, by the way, the answers are resounding yes. Let's get in front of them. Other people will. Let's, we don't want them to go find another agent on Zillow. We don't want them to go find another lender, Rocket or Zillow or one of the aggregators, Realtor.com, Mortgage Partners, whatever. So, we're betting heavily on closing that loop, whether they're going to buy right away or not. Let's bring them in our ecosystem, give them everything that they need, whether they're going to be ready to buy or not. Inventory's come up quite a bit. Inventory is the best it's been in what, a year and a half, at least 2 years, probably. I was actually looking at that Housing Wire graph. I'll pull that up in a second. That maps the monthly inventory plot points. But yeah, I mean, but that's always the nature of it. It's like the goal pull through is not 100%, right? It can't be.
Well, right. Sure. Never was, never will be. I think the way I was trying to understand these pockets is, at least in the short term, 2025, can you try a regional approach. Will the regional approach appear stronger in the short run because you can still find those pockets versus the longer run threat to what you were saying about the digital ecosystems that are pulling those leads out and going to the biggest players? But I'm still kind of running the numbers and going, okay, there are active listings that say more houses than 2023, but all cash buyers are also up 10% over historical averages, from 30% to 40% of the market. So now, as a mortgage company, those active listings don't look as good as they did a minute ago, because not only are they only slightly up, 10 to 12 more percent of them are gone relative to my customers who need to be able to finance it. So yeah, is there still something there this year? Sure, but there's more and more competition among more and more mortgage companies for fewer and fewer of those. Then the outcome is what? Share the.
Yeah, this is what I was looking at with I actually pulled this up in a partner meeting a few times this week. People ask what we're seeing and things like that. And this data really only goes back to January, and I guess one plot point in February. But so that's pretty good. But yeah, it's it's not like it's way up, right? This is a small, if you zoomed out this graph, there was a lot more inventory in earlier periods, right? But yeah, it's a whole lot better than we were at this time in 2022. It's somewhat better than where we were last year. Median price really hasn't changed. There's been inflation over the last couple of years, so maybe you could even argue that inflation adjusted prices are down. I suppose you could over the last 2 years only. So there's a few interesting things I see here.
I really like your comment about, if you start the line at 2020, it shows a pretty high up and to the right for median home price. But if you start that same line, in 2023, it's a much more modest median home price.
Or from 2022 home buying season, even.
Here's the other thing I've been struggling with. Here's the other thing I'm struggling with, though, for mortgage executives, is those are national numbers that are, I think, skewed because the top 10% of markets and the top 10% of customers make the bottom 90% of markets and the bottom 90% of customers look way better than they're actually positioned for. Right? So if you took that same graph and said, show it to me without Texas and Florida, or show it to me without California, Texas, and Florida, what would it look like? I wonder what active listings look like in places. I know at the summit, Logan mentioned one that was interesting, just as outliers go, which was active listings in places like Vermont were up 50% from last year.
Yeah.
But then right next door in Connecticut, they were down 50% from last year. So just neighboring states or neighboring regions can even have wildly different outcomes. But if you put New England together, then Massachusetts and Vermont would make it look a lot better than if you just looked at Vermont or just looked at one of these other things. And so
that's interesting you bring that up specifically. My friend in Maine, who's a big real estate agent there with EXP, Chris Davis, published a thing today about Maine's rising inventory. So I guess it's just state by state. It's hard to say, but I think, the positive is inventory is basically the highest it's been in a couple of years, and mortgage rates are the lowest they've been in about 6 months. And close to the lowest they've been in longer than that. There are reasons for that are negative for the economy, but we're kind of counter-cyclical here in the mortgage origination world. It's I think about that a lot, but I think pent-up demand that is slightly unlocking as rates start to come down. but yeah, more tangibly, there is more inventory in a lot of markets than there was, and maybe more importantly, there are more price drops. There are a lot more price drops even this month, last 30 days, last 60 days, than there have been in years since 2020. So that's not necessarily like applauding price drops, but it's like if a home's been like, you don't like, it doesn't really matter if inventory is there if it's not affordable, right? But if inventory is there and prices are dropping, now we're getting closer to that affordability conversation, hopefully.
Yeah,
slightly closer. But I know your post today I read, I liked. I've heard of that company, Rocket. They do some stuff well. But you were mentioning specifically around manufactured homes. I know that's a favorite talking point for you around, sure, the inventory of $500,000 single family homes is not that high, number one, and really we need a lot more like $200,000 homes, right?
Well,
and so that's where the it depends on the market, obviously, but that's where the manufactured conversation, starts to dovetail in, I guess, for you.
Yeah, I think my headline was or is like the starter home is dead.
Yeah.
So the American dream being
the starter home, most people can't afford. Yeah, in the market. Yeah.
So the American dream being tied to the starter home is a kind of a difficult conversation these days, to the point you're making about who you can pre-approve and how do you do business in this market. And so I was saying, like, and I understand better than anyone almost that I risk overcomplicating things, right? So I risk overcomplicating things, but my point was, shouldn't mortgage companies be trying to work more holistically with the programs and providers of housing such that you can generate more of an ecosystem play, or you can generate more of an activity, so that if you say to someone, do you want to own a home? Here's how we can make that happen today. The 30-year fixed with even 3% down, 5% down with these programs, it is a very one-dimensional tool that we still rely on for this conversation. We're talking about owning the American dream, and we're talking about owning the American dream with one tool, one avenue, the 30-year fixed. So my point was, why aren't more mortgage companies, especially the big national ones with the budget, working more holistically to say, well, if you can't find the home of your dreams, how do we get you one? How do we build you one? How do we find you one? How do we create some equity you can have in something else that is around housing and real estate?
That's where I was going to go. I think I asked you this morning when we were talking about your post before we got live here. Is the American dream branding has always been like a little complicated, but mostly really positive, I think. But is the American dream that you have bought a home as an investment vehicle that's been one of the best performing, if not the best performing, long-term investment vehicles throughout the last, history of America and in most countries, or is it literally the housing? Some people are I think about New York City, right? A lot of people rent and buy a vacation home, rent and buy multiple investment properties in another market. The American dream, I don't think, is in New York for a New York, someone that wants to live in a city, in New York City and San Francisco, maybe specifically, like is less about, it's much more about the investment and much less about the, wood and concrete, right? So it's kind of interesting. I've owned real estate in Detroit. I rent in New York. I'm looking at buying other investment properties and things like that all the time, and invested in real estate funds. I try to get exposure other ways, but I think about that for my, I guess my cohort, millennial cohort. A lot of us in cities, and it is extremely hard to argue that the best investment vehicle is buying apartment in a city. And maybe someone can argue that, I don't know, but I haven't heard it. But so that's where it gets a little fuzzy. So it's been a great investment product, the 30-year fixed on an appreciating asset. But is it just that we need to mimic something like that for people's financial stability? Is that 50% of it, 90% of it? none of it, and it is about the home. I don't know. Because then if you think about manufactured, it's like, you know, potentially like we can, you know, they have those $20,000, you know, houses you can manufacture where it's like the pods that like you can stack on top of them. And for $40,000, you can have a large house, right? Like I've seen all those videos. You've sent them to me. And you know, prices will probably go down on most of it. I mean, maybe raw material prices will go up. I don't know, but with tariffs, et cetera. But like what if all these homes, you know, are a lot less valuable than we think because you can manufacture great housing? Then is it still the dream? You know?
Yeah. So it's a great point. I'll tell you what my dream is we still don't think seemingly differently about how we think about financing and supply coming together. So the example you use that gets me excited would be like, you and I know high net worth individuals. You and I know friends of ours that aren't even high net worth individuals who ordered a car and were willing to wait for it. Like if you ordered a Tesla, if you order a Cybertruck, how long did those guys wait? Now they're first movers, early adopters, and maybe had other emotional reasons to do it. They want to be a part of something, blah, blah, blah. But my point is, with this American Dream conversation, like, you want to be a part of the housing market? Order a house. Let's go.
Yeah.
We'll get the waiting list going, and we'll order houses on your behalf.
Or buy 50% of someone else's, right? You know, or 5% of someone else's, or whatever. Yeah, like
and shouldn't mortgage companies, especially the big ones with billions of dollars to spend, be thinking about stuff like that? Like we're still relying on a narrative and an idea that, yes, at one time was the best primary way. My point to everyone is to say, isn't it beneficial to be thinking differently about these things as they change?
And it very well still may be the best way, right? It's just like not for everyone, you know. Right. It's like, can be an and conversation of like, yeah, the 30 years, like in most markets, you're going to do really well buying a median home with a 30-year fixed mortgage. Like, I don't doubt that, but less and less markets are looking, you know, like that sweeping statement like isn't very helpful, because there are a lot of places where that doesn't make sense, either because of the expected ROI of an area, the risks of an area, like, you know, not being able to get insurance in large swaths of Florida and California are probably going to matter. You know, already matter to people there, obviously, but are going to matter more globally to the industry a lot in the next few years. You know, cities are, you know, real estate has a negative ROI for the last several years, like, so on and so forth.
You hit the nail on the head, right? You hit the nail on the head, because like we get pushback, or I get pushback a lot, which is, well, my friend who's a real estate agent said, or my nephew just bought a house, and
it's already appreciated 20% in the first year. It's like, great.
Somebody that runs a mortgage company will be like, well, my kids bought a house, so everybody's going to want to. And it's like, whoa, we have this group of people increasingly who get money from their parents to buy a house, and then we use them as the archetype for everybody and be like, well, they're still buying houses, so all millennials will still want to buy houses. It's like, whoa, if you fit in this specific category of people who buy with the right tools from their family in the right markets at the right time, sure. My point is, can we expand our aperture a little bit and not define the whole business strategy around that thing, that one version? And so you're right. Of course, people are still going to rely on the 30-year fix to buy a house at some percentage. What I was kind of suggesting was, though, that percentage is decreasing dramatically over these other groups, and we're not talking about it, or at least not in a way that feels to me like progress, I guess. I don't know. Maybe I'm being too naive or too cynical.
I mean,
but
the population growth is like a whole lot faster than the supply growth, right? So it's like the math says what you're saying has to happen. So,
and interestingly, I did kind of think about this a lot too, Brock, which was, you know, 100 years ago, it was not uncommon to move for a job and a house, right? Mm-hmm. Increasingly, it's way less. So would you say, just because, well, our parents moved for a job or a house, or my grandparents moved for a job or a house, so let's just rely on that? Okay, maybe, but also, like, are you sure you can rely on a trend that might no longer be true? Like, I think that's the other piece of it too. Or I think you maybe pour a lot of money in a differentiation strategy that gets people to buy a house in a new place. Yeah. Hey, you want to buy a house? We got plenty over here. Come to Detroit or whatever. I mean, I think Like, I would be interested to see whether millennials have reached the point where.
Yeah, I mean, there was a whole. I talked about this 4 or 5 episodes ago, I think, but like, you know, I went to school around Portland, Maine, and worked in the entrepreneurship community there for a few years before I got in the mortgage industry. And Portland, Maine, there was a whole trend of like, move here and bring your own job, right? It was like, you know, great remote working spaces, cheap houses, you know, relatively cheap houses with city amenities, and there are all kinds of credits and programs and this and that. But the trend was like, bring your own job, like bring a remote job. When remote jobs were, you know, slightly less common, you know, early 2010s, right? Or, I mean, much less common than they are now.
Pre-COVID, they're different.
But yeah. It kind of, I think, really exacerbated during COVID. But yeah, I thought that was interesting, of like hubs of where to bring your own job, hubs of where to go for jobs. There's the whole
I like talking about like internet rabbit holes that you and I go down and send each other stuff. The internet rabbit hole I went down at that time, 2018, something like that, was I think it was Tulsa, Oklahoma, did the same thing.
They would pay you all kinds of money to just move there. Yeah, like straight up.
And I actually think, I haven't seen a deep dive after the fact, looking back, but I actually think it did matter. Oklahoma's a good market.
I know.
It actually, me too. It worked, and to some degree. And I think maybe that's a hopeful, optimistic data point, which is to say, hey, Jeremy, you started this conversation around like what the big picture is nationally, but if you want to carve out a regional message, you could make it work in these different places. Now, that's going to be harder for national mortgage companies to compete with. All right, good. Let's see what happens. I think that, to me, is a more interesting strategic and competitive conversation. So maybe that's where we find some hope in the numbers. Yeah.
And maybe the right products to do parts of this are not mortgage products, right? You know, they're something else, right? They're like not just collateralized to the house, you know, they're like, there was a lot of conversation, and there's still a decent amount of conversation about like the crypto mortgage of like, or like, you know, using your stock assets to collateralize, you know, something similar to a HELOC, or, you know, so on and so forth. So there's a lot there of like, is it about the, so I guess back to the American dream conversation is like, does it need to be, number one, is manufactured housing going to be deflationary because it's getting so good and so cheap? Maybe that buying a home wouldn't be a good return. I don't think we're not close to there. I don't think, but how do you think about that?
Yeah, the good news there is, I thought about it in a bunch of different ways, but one of them is the demographics you mentioned earlier tell us we have a long way to go before we get there. Mm-hmm. That the quality of homes today. So like, I'll give you a really good example. I know a great manufactured finance company in Texas, and the founder, the CEO, is basically like, look, my 2x4s aren't any different than your 2x4s. Like, I'm like, to your point about materials, like my 2x4s don't age any different than yours, right? We're just building them in this productized, streamlined, you know, factory environment way. But I think that we have a long way to go. The second thing is, I don't think it's deflationary overall, because that's the type of wealth base we need to accelerate the generation to do more in the economy. It's going to have a net benefit to employers and incomes and opportunities like entrepreneurs and small businesses, because that group of people will have a secure base. Could home prices flatten slightly? I would say probably not, given the asset and given the demand. But even if they did, it would holistically.
It'll probably just be a narrowing of the difference between, like, you know, the trailer park assets and the you know, single family median home, right? Like, they'll probably just start to look really similar, right? And what's been and if you have spent any time on any of these real estate forums in the last 5 years, what are well, there's a few commercial conversations around like storage and whatever that have performed extremely well. But in terms of resi, by far the best performing assets have been various versions of mobile homes, trailer park, you know, assets at like a fund level, and I'm sure at an individual level. because all they're doing is collateralizing the individuals. So, it's like if the people hunting the highest returns are already going to manufactured housing, basically, I guess is what I'm saying. If you go to the sharks, they seem to be buying as many mobile home parks as they can, basically.
Yeah, and they're looking at like land plus operating costs plus cash, against cash flow and the return. I guess what my pitch
how many more people can you house in that setting than in the same amount of
so
real
my
estate
pitch,
with another,
my pitch would be we need to start thinking about all kinds of communities in new and different ways that address cost, cash flow, and return for everyone, including those that live there. That to me is the way to start thinking about the next vehicle or the next marketing pitch or the next strategy that really unlocks the consumer awareness to say, I want to see what that is, right?
Mm-hmm. Yeah.
It may not be a mortgage company that's even capable of that. I mean, I said mortgage investors because I think it's a fund or mortgage investors that are probably better positioned to structure that and then have somebody else like a mortgage company go out and sell it. But the point is, we are getting large. We have large enough mortgage companies now that it is beneficial to be thinking about new structures around ownership for units, homes, types of communities where you are accruing equity. And it's maybe not in the way we would say the traditional sense or the traditional American dream, but the new American dream is ownership.
Yeah.
Give me shares, give me equity.
Yeah.
Would I
rather own 1% of 100 different houses? Like probably.
Maybe.
It's never been a good option. Yeah. But like if it was.
Never tried it. Yeah. We've never given it to anybody to try. And there's a whole bunch of reasons why, but like that's kind of
0.01% of 10,000, whatever, take your pick. Yeah.
Yeah. I saw my role, at least this week in moving forward, is like trying to find people who think that way and want to push it so we can start testing this stuff, because the same rinse and repeat on the same old message about the 30-year fix and the American dream to me was like, no. People want to hear about ownership. People want to hear about equity. If they can't find it in the market, they're going to go find it elsewhere. So let's create stuff that they can use to create wealth. And it may not look the same as it used to, but that's okay because people are willing to think outside the box. And I thought social media influencers, brand building, and crypto were great examples, data points. They're not the solution, but data points to show people are willing to think differently about equity. They want to own stuff, even if it's a smaller percentage than we're used to our grandparents owning or our parents owning. Why go with the same old story? Go with a new story. Help people own equity in something, and I guarantee you will flock to it.
I mean, there's been what, tens of thousands, hundreds of thousands of fintech startups, whatever you want to call them, finance companies, fintech startups, whatever, that have tried to mimic like, how do we let everyone invest like the rich? How do we let everyone invest like Warren Buffett, like whatever, like Titan is one that I see all the time of like investing, like you can invest in like private equity funds, or, there's a million different ways to dabble in VC funds, art funds, wine funds, whiskey. I have several friends that have invested in whiskey barrel and whiskey fund companies somehow, which is very cool, but like, very different than I think the conversation has been going.
To your point, sorry, I didn't mean to cut you off.
No, jump in.
To your point, those things often get viewed as like too niche or whatever by our industry, because they don't kind of look at the larger trend that we could capitalize on and go, oh, it's just this over here or this over here. The example that makes your point from earlier, I thought, was Schwab, right? Charles Schwab. Is everybody going to use it? No, but guess what? Enough people did to make it a transformational company in the history of investing. So like when you say like, is everybody going to move away from the 30 fixed? No, but could you create a platform where enough people do so that you have essentially like the Schwab effect this many years later for this asset class or product? I think so. And so that's kind of what I'll be working on. It's definitely what I'm thinking about this week. But that, I thought that made your point from earlier even more so.
Yeah. And so let me ask you, the mortgage products, put your capital markets or mortgage product hat on.
Okay.
because I've never spent any time deep in that world. You know, I'm like adjacent to it a lot. Why has it been so hard to build good products or widely available products for two different things? One, manufactured, period, any type of manufactured home, and two, more than, what is it, 4 units, more than 4 unit properties. Why have those two things been so unavailable to most people in the mortgage market?
I would say historically, the two things that pop to mind for me is, first, there was a weird web of local tax title related rules that made it very confusing to scale a mortgage company when certain jurisdictions called certain property one thing versus another. Typically, it was personal property versus real property. And the
Sure.
real property versus personal property rules were kind of messy enough, jurisdiction to jurisdiction, that when mortgage attempted to scale with technology, they looked at that and said, well, we're used to scaling rules in the LOS like Fannie and Freddie rules, but not these super wonky county by county rules about what is personal property versus real property. So that was one initial thing. I will tell you, both the manufacturers of the product, as well, the actual homes, as well as the advocacy effort to resolve those nationwide, has largely cleared that up. Not everyone is aware of that, maybe, but that was one of the big barriers. I think the second big barrier, and so that would be one to me. I think the second big barrier was just the ability to securitize consistently off of credit standards post-crisis. Was like, let's make this super easy, because credit risk is where the housing crisis went. It was documentation standards, but post-crisis, it became, we're just going to shrink down to the most vanilla credit you've ever seen. And we did. And so a lot of what we're talking about
makes sense at the time, but it's been a lot of time. Yeah.
And then the unfortunate consequence, or the unintended consequence, was private capital never stepped in to do other stuff, even at a higher rate. It was just too risky, or there wasn't return, or there were massive returns in other verticals. So private capital just moved to a different focus. And so there wasn't a, let's find a way to do the right credit box for the right product for everybody to increase access to products and services around manufactured modular. So that's kind of the two things that popped to mind for me that were historic obstacles. I think the thing I'm trying to address, or one of the things I'm trying to address so that it no longer is an obstacle, is just getting all these industries to talk to each other. You've heard me say it 1,000 times. People who watch this show have heard me say, home builders, mortgage, real estate, and title still act like 4 separate industries. We still do.
Well, I mean, you've heard, Adi, the co-founder CEO of NewZip, he tells the story, every client, that he spent, 15 years or whatever on the real estate side. He was, director of innovation or head of innovation or whatever at Keller Williams, and went to every conference and was on every stage in real estate land. And then he went to his first mortgage conference, and I was the only person he knew. And he was like, dude, what? You're the only person I've seen at both of these. What are you up to? And that kicked off the conversation that led to me joining him at NewZip. But it was like a hilarious, but also not great thing. Good for me personally, but not great thing that no one is in both, has a foot in both canoes. That's why NewZip exists for sure. But also is not a good sign. It's a trend.
Yeah, so I think we can break those. I think we are breaking those barriers down. And I do see a lot more willingness to collaborate and ideas in ways that technology or other incentive structures can work across these things. But it's still a slow go. I mean, that's still really, really slow.
Looks like we're getting some support for our knocking down the walls between the industry conversation. And I'm still far from knowing even what I need to know about title, because that's a whole nother black box that I haven't spent the right time in.
That's what I'm here for.
All the time with you and all the time with all the different partner title companies we've had over the years everywhere I've been. But yeah, it's really tangible. So I know Rick's on his way to the ice experience coming up in Vegas the next couple days. So it looks like you're not headed out there. No,
not going to be at ice. I do think it'll be, from what I've heard, a lot of people in the network will be there. So I'm sure there's a lot going on in Vegas. I'm sure Rick will tell us all about it when he gets back. And then I'll end on this thought and then leave it up to you to end on the thought. I did hear some things out of Housing Wire, and I think they were confirmed this week, I would say just in the national news politically, that I do think March will be determinative of 2025 when it comes to rates. So what happens in the next 3 to 4 weeks will kind of set the stage for what we can expect. Maybe that's assuming too much stability for the rest of the year when there's always going to be some wild cards and stuff. But I do think things are coming in to place that will help set the stage for what rates and the economy are going to look like. And then second, when you think about FHFA and CFPB, those confirmations have to still work their way through the Senate. But by early April, we'll have leaders in seats that then also kind of project stability or not on what happens in that market, specifically the GSEs, but also the regulatory environment with the CFPB also will be projected late March, early April. So in the next 30 days, I think what we have felt over the last 30 will come to some sense of now we can kind of see what we're dealing with for 2025.
Yeah.
That'll be my focus next week.
Well, that is definitely true. That definitely tracks. I shouldn't say true. That definitely tracks with how NewsZip thinks about, forecasting our business, our numbers, our hiring, market share, everything is kind of like March, April really kind of do tell us how the rest of the year is going to go. Just, seasonality, you can track pretty closely across all kinds of different economic cycles. You still get the seasonality. The truth is, if we don't see a big bump in March and kind of early April, it's a really bad sign for the rest of the year. And then I wouldn't say we've fully seen it yet. We've seen a small bump the last couple of weeks, maybe, in origination business and real estate business. But I would say, and the other thing is, purchase transactions take, anywhere, the fastest, they can happen, technically would be under 30 days, but we see closings distributed months 2 through 8, after we start working with a client usually, and sometimes much longer. So it's like the revenue that's going to be recognized in purchase, mortgage and real estate kind of needs to be in the pipe by like June, July, if you really want to push it, August. But really a lot of it needs to be in March and April. And so it kind of like everyone's kind of sitting on needles of like the economic data, but also the consumer behavior. I mean, there's a lot of discussion of consumers are saving a lot more money and battening down the hatches for a possible recession, and inflation numbers that's like a new conversation in the last like week, 2 weeks. So hard to say what's going to happen, but that definitely tracks with how we think about the world, the business world.
Right on. Well, thank you for the comments, Lindsay. Thank you, Rick, for your comments from the sky. I put him back on. See if he's there.
He's loosely here.
We can start and end with Rick. Rick, we lost you in the middle. Well, kind of. You're like robotic.
We can't like really hear you, but we can see you. Sort of. Yeah.
Have a safe flight. Give us live updates from ICE. You should be live tweeting ICE.
Okay. See you.
All right. That was our time.
Yep. That was good. All right. Well,
have a good weekend, Brock. I'll talk to you soon.
You too. Thanks, Jeremy.
All right. Take care, everyone.